Always a pleasure to have you on. I am Pius Kojo Baka. We can now settle and take a look at our stories. And bondholders are expected to forgo about $4.7 billion that government of Ghana should have paid to them. Now, this is part of agreement reached with Eurobond holders when it comes to restructuring 13.1 billion dollars, I beg your pardon, owed these creditors. We've got more for you in the following Business Desk reports.
The term sheet covering the Eurobond deal showed that the bondholders will also provide a cash flow of $4.4 billion during the period under the IMF program. These concessions are needed according to the new deal to restore debt sustainability under the fund program. Government is also proposing two options under the deal when it comes to restructuring the Eurobond debt. This is the PAR and the DISCO option. For those who take the DISCO option, they will receive 3 new bond instruments. However, the PAR option will have up to 1.6 billion cedis cap. The agreement will also ensure that government will enter into a non-financial terms described as the most favored creditor clause that will ensure that other creditors do not receive better net present value terms. The bondholders have also agreed to a 37% haircut on their interest and maturity. Ghana is also required to publish certain public debt information on a semi-annual basis. Measures have also been taken to ensure that the courts don't invalidate this deal. The formal launch of this Eurobond deal will happen in the coming weeks, subject to agreement on the definitive documentations. Government will seek the required approvals and support of the broader bondholder community in order to successfully consummate this important transaction. The IMF has also given its blessing to this deal, meaning that government could go ahead and sign the pact with the creditors once they agree to the terms. The pact is coming at the time the IMF board is set to meet Ghana this Friday when it comes to the country's second review under the fund program. Government also believes that this deal will go a long way to help in stabilizing the Ghana cedi as well.
Now, some customers whose funds have been locked up since 2018 banking sector cleanup are skeptical about the government's decision to pay them by October this year. Now, this follows an announcement by government that an amount of 1.5 billion cedis would be released to compensate people affected by the banking sector cleanup exercise from now to October. Now, let's hear from the Finance Minister, Dr. Mohamed Amin Adam, at a town hall meeting in the United Kingdom making that announcement.
That government will not be held responsible for the investment decisions of individuals. But this government is so caring. Mistakes were made. People were not well informed. Maybe they didn't know who to consult to be informed or advised. But we also know that the people who are affected are suffering. We heard that some people have died. Some people had to commit suicide. This government is so caring that in the first place, we granted some bailout to all the affected. And I want to tell you again that the president has directed that we do another bailout. So between now and October, we will release 1.5 billion Ghana cedis to the affected people. This will not pay the entire amount, because the entire amount is 4 billion.
All right, so what will this mean to the banking sector? And I want to bring in the perspective of a banking consultant, Dr. Richmond Etuahini, to help us understand this. Thanks so much, Dr. Etuahini, for agreeing to speak to us. Now, you heard the Finance Minister, 1.5 billion cedis to be earmarked, basically to compensate people affected by the banking sector cleanup exercise from now to October. And I want to know how feasible this would be, because some customers are skeptical about government's decision to pay them.
New to your cherished viewers. I mean, the statement that the minister made was quite unfortunate, because to say that government is caring, and if people are bound by a bond, a Ghana government bond, and for other reason, for any other thing or for anything, or people have deposited their money in a bank, and for another reason, the bank has gone into liquidation or has been liquidated, I think it's not a very good statement to support the confidence in the industry. I believe he had to be circumspect about depositors whose money has gone, and say that it is not their responsibility to pay or not to pay. I think the question I want to ask him, was it their responsibility to pay the 21 billion, which they have paid already? For me, if we are making statement on the banking or financial sector, we must be circumspect and see the implication of the statement. Because now, if I had money, seriously, I will not put it in a bank at all. Because if it goes under, I don't think I'll have my money. But to go to your substantial question, the main question, I mean, I've always said, and I will continue to say that, when we wanted to do the financial sector cleanup or the banking cleanup, whichever way you call it, I think we did not take our time to study the nuances of the problems in the banking sector. So I'm not surprised that in one state, you hear people talking about 21 billion. In another state, you hear people, the governor I think in November, said it was 25 billion, including the other SDIs. I am not surprised that we have come to this state that the government thinks that there is a need to pay depositors who have lost their money since 2018. So for me, it is just a good beginning. And I mean, they should take the government's word and the finance minister's word that at least the 1.5 billion out of the 4 billion, as he said, will be paid. And we just hope and pray that it is paid so that the confidence in deposit mobilization and also in the banking sector will rise up again. Because you see, we have had too many problems in the financial sector or the banking sector. Either it's no financial cleanup, it's DDEP. If it's not DDEP, it's non-performing asset. I mean, these three issues are too huge for us to take it just like that. I mean, we need, as a country, to look at our banking sector and look at how best we can clean it and make it clean so that it will bring confidence or repose confidence in the depositors and investors in the system. That is what I would say for the time.
It's good you pointed that out, because some are of the view that, well, because we are inching closer to the political season or the main elections, this could be a political talk, and it's really not what the government wants to do, basically just to score political points.
Well, whether they want to buy votes or not, or they wanted to convince people to vote for them, I think the people who have lost this money over the years would also think about the time value of money. I mean, if you're paying somebody 1.5, let us work back to 2018. The CD was 5.8. I mean, so the same 1.5 you're paying is not the same money that you should have paid earlier. So whether you use it to coerce people to vote for you or not, those who are very discerning will know that, look, we have lost so much, and this cannot convince people because the financial, the environment is not the same. I mean, 1.5 in 2018 divided by a dollar of 5.8, you can calculate what amount I'm talking about, and divide the same dollar, the same amount by the 16 or 15 point something. So I think the viewers are more discerning, and then they will make informed decision. Because some people have lost their lives. I mean, people have lost their lives. And if people have lost their lives and you're going to pay, and somebody is saying that we are not going to pay all, I mean, we Ghanaians are brilliant, and they will know how to handle whether you want to coerce them or buy them, how they will have to take that decision. So for me, it is neither here nor there. Let them pay so that the little that they receive would at least go a long way to compensate the suffering that these people have suffered over the last 6 years.
Dr. Atuani, let me tap into your expertise now. So what, in your view, you would say that government needs to do in terms of distribution or distributing this 1.5 billion cedis equitably and, of course, fairly to ensure that the affected customers, do not feel shortchanged? I
believe that before you even come on the radio or television or make at that place, what is it? Is it conference call center or somewhere, town hall? I think you should have set your modalities. How do we prorate it? Who gets what? And what criteria are we using to pay? So, I mean, it is not after you have said it, then you work, I believe sincerely, They should have done all these things before even making the pronouncement. Otherwise, you're going to create another chaos that we have seen. So for me, I'll give the benefit of the doubt for the people who are in authority, who are supposed to do the right thing, who do it without thought and how, the methodology they will use in paying these people. Because if it's 4.1 and you're going to pay, I'm not sure you're going to pay people 100%. Possibly you're going to pay around 30%. And how do you do it? So I leave that statement to the Honorable Minister and the President who have made this sweeping statement.
All right, thank you so much, Dr. Richmond Etuahini, for speaking to us on the marketplace. And I want us to touch on our earlier story where bondholders are expected to forgo an amount of $4.5 or $4.7 billion that government of Ghana should have paid to them. And I want to engage the perspectives of an economist, Professor Lord Mensah, on the back of that. Thanks so much, Professor Mensah, for joining us on the marketplace. Now, what do you make of the Eurobond deal term sheet? A good one, you would say? Unmute for me, Professor Mensah.
Yeah.
I'm asking about your perspective on the Eurobond deal from the Eurobond holders, the term sheet. I'm asking whether it is a good one for the country.
Yeah, whether it's a good one or not, I mean, it's our creditors who are dictating, the kind of package that is supposed to suit them. Remember, we presented an earlier, package of debt restructuring, and that was not, something that they bought into. And so we had to come back to do our assignment well so that, they can agree into the terms. But with the current state of the cash flows, as far as the debt service is concerned, I mean, clearly we have, backloaded it from 2026 upwards. And you ask yourself, what is going to be the production capacity of this economy to be able to service a debt of $1 billion and over a year from 2026 upwards? This year, which we are halfway already through, I think the debt service is around 477,000, which clearly, tells you that indeed we have, backloaded, the debt service. But, if you look at the trajectory, if the economy remains, the way it is now, it will find it difficult to start servicing that debt of $1 billion and above from 2026 upwards. But with the current state, I think the government is also going to make room for a bit of savings. And I know the reason why the finance minister is happy with, the current state of, cash flow trajectory as far as the debt service is concerned. Probably this year, there's going to be that room of fiscal space to get some money stashed somewhere for elections. And that is why probably the $477,000 that is being paid, we seem to be happy with it. But if you look at it critically, I will ask myself so many questions to say, okay, what is going to be the production capacity? What have we invested since we started this IMF, program? The IMF program is not a program that's supposed to turn around our economy. It's not a program that's supposed to bring back, the exchange rate to the level where it will be appreciable as far as, the market is concerned. We have to leverage on the fiscal space that the IMF program and then the debt restructuring gives us. But so far, we are 2 years into the program. We've not seen any policy that the government has rolled out to ensure that, whilst we are in the program, we use it to turn the economy from short to medium-term production so that we can generate more, foreign currency. And when it comes to our debt payment, we'll be able to, service the debt. So I'm happy with cutting the agreement all right. It gives a signal of hope. But then in the end, for true impact of the economy, let's see how, we make room for this debt service on our public purse.
And how do we do that? How we navigate that?
Yeah, of course, it's quite, tough now. So we have gotten the debt restructuring agreement all right. But as far as I'm concerned, government's ability to raise enough dollars to service those streams of cash flows, I think will have a serious impact on our, foreign exchange. And that is what will give us a true picture of this economy.
Thank you so much, Professor Lord Mensah, for agreeing to speak to us on the marketplace, on the subject matter. And of course, we shall keep our eyes on that and keep you posted in our subsequent bulletins. But let's touch on this story we have for you right now because we know that the graphic Stanbic Bank breakfast meeting will be on or is currently underway. And of course, we've got to bring you more from that because some political panelists at the conference are calling for radical agricultural policies to address the sector's challenges with a specific focus on agri value chain. According to them, it is about time the private sector is involved in agricultural policies to boost the fortunes of the sector. Speaking at the second quarter graphic business Stanbic Bank breakfast meeting, CEO of the GASL Ghana, Kwesi Kobo, stressed the need for government to ensure agricultural sufficiency, tackling food inflation.
We are net importers of CPO. We borrowed inordinate amounts of money to fund the cocoa sector. Where cocoa grows, oil palm grows, rubber grows. Okay? Now, from an agronomic point of view, where there's contiguous production and people are not managing their farms well, you're talking about pests and diseases. Coupled, of course, we know the Galamsey program has also exacerbated the situation. But you saw how high the cocoa prices went to. So the question I ask myself is, do we still need to do 1 million tons of cocoa? Because if you do less than that, prices go up. So the question I'm saying that we need to be radical in the way we look at issues. Look, I can go on, and sometimes it is sad that if you look at our trajectory, we keep on repeating the same mistakes and expect different results. So my answer is that focus on a few value chains, address it comprehensively, and then when you learn your lessons, you move on. And then the last point is that let the private sector be the lightning rod. Let the private sector be the lightning rod. How often is the private sector consulted or spoken to? How often do we engage them when they come out with these policies? Whether it's PFJ, where the private sector consulted, was that the instruments of the policy, was it the critical ones to address the problems of food inflation? Because if, for example, issues are made that, well, we gave X amount of farmers benefited from PFJ in terms of input supply. But is that why you give farmers fertilizer and seed? You give them fertilizer and seed because you want to see an increase in productivity. And if a measurement of it is how many farmers benefited from being beneficiaries of supplies of fertilizer and seed, that for me, that I think is a failure.
And that's all we have for you by way of Marketplace here on Joy News. I am Pius Kojo Baka. For more stories, do log on to myjoyonline.com/business. We enjoy the rest of our programs. Bye.